Hello and welcome to Pro Trader Strategies market commentary for Wednesday, October the 23rd. My name's Eric Wilkinson, and yes, you might recognize me as the Wolfman. What I'm here to teach you guys is option strategies and how to implement those option strategies, which is more important than even knowing how to build those option strategies. You can find out how to build an option strategies online, I'm not going to lie, but implementation is the key to success here, and knowing when and where to put those on is also what we talk about in these webinars for sure. A little bit I'll touch on in the daily market commentaries, but I'm kind of assuming because I don't have enough time to really dig into the nitty-gritty of those strategies, a little bit about that in these market commentaries. But without further ado, let's get on with some economic data. We got crude oil inventories here in the United States, and that came in at a drawdown of 1.7 million barrels after last month. Remember, we had a huge build. This has been a drawdown. They were expecting a build of 2.5 million barrels, so that was a big move to the downside, which is giving a momentum to the upside in crude oil. So if you haven't bought your gas or filled up your tank, you might want to do that, because it looks like crude oil is heading towards the point of control at this juncture. All right, we also got consumer confidence that came in at -8. It was expected to be -7, which still isn't a good thing. And that actually, is for the European Union, or Europe. That's overseas, obviously. But that consumer confidence over there not looking too good. And that is ahead of the flash PMI numbers that we have coming out tomorrow. So those are really the numbers we're going to be looking for. That is more forward looking than what the consumer is looking at. One thing we did see today was Caterpillar came out with earnings. They missed on earnings. I didn't play that one, thankfully. They missed on earnings, but their year-over-year growth and their earnings and everything else were actually pretty decent. Forward guidance didn't look too bad, but the market really wasn't loving those numbers, as we'll see in the charts there. After looking at it, I just really thought the analysts really estimated what their earnings were going to be, especially with the way that the global economy overseas was looking, and most of their business, or a lot of their business, is generated overseas. So, that's a bit of a conundrum for me there, how they messed up on that one. But here we go. We can look at crude oil. It is moving higher by about 75 cents, 79 cents right now, and testing that $55 a barrel that we've been talking about. Now, I've said time and time again, I do expect crude oil to stay within these kind of two points of control. One is for the volume, one is for the time. And I expect it to kind of build in a little bit of this volume in here, which I think is what we're going to see. We're trading up towards the 200-day move, or sorry, the 50-day moving average. But the market, I expect to kind of bounce back and forth here, and that will fill up these volume nodes right here and create a nice big one right in and around that $55 barrel where we're trading right now. So I think that that's still in the realm of possibility. I think that that's probably what's going to happen. We're going to wait and see what happens tomorrow with the economic data overseas. But at the end of the day, crude oil kind of right in line with where we've been talking about in the past. All right, let's talk about gold. It is up about $8, almost $9. Again, looking to try and test that psychological level of 1,500 a troy ounce. This is where the volume node is, right just above that at 1510. That's where we've got a volume node and time being spent. It's not a surprise. We've been trading right around this area for the last month and a half or so, and I expect to continue to see that. Just know that when we get up near that 1,500 a troy ounce area, that is going to act as resistance. The bulls are obviously going to try and get above that. The bears are going to try and defend that, and I expect it to pierce and start moving higher, especially as the dollar starts to weaken. All right, bonds has gotten back into the 160 handle. Yesterday we came up against the Fibonacci and found some resistance here. As you can see, we are back above the 160 handle there by about 13 ticks. Yesterday we did settle above that, but just below the Fibonacci at the 160.02. I think the 160 handle is more important than this Fibonacci extension that we have lined up here. So I think that still trumps it we're above that now. And the closer we get down the road here towards that FOMC, I think that we're going to see that sustained above 160 because the probabilities of a Fed cut at this meeting are still very high. All right, we've got the VIX off a little bit, still in the teens, and that's because we've got across the board. This morning was a mixed bag on equities. We are up 20 points in the Dow Jones Industrial Average. We've got a negative bar there because we did open up a little bit higher. Dow Jones was one of the leaders this morning, I think, while the NASDAQ was in negative, and so was the E-mini S&Ps. But here we go with the NASDAQ up 19 points on the day. You can see overnight was a little bit more bearish than the day session, but during the day session, we've done a pretty good rally throughout the day. We did pierce above 3,000 earlier this morning. It has since slowed down on momentum with the overall market. You can see here we were above 3,000 just probably 30 minutes ago or so. I think we're going to probably get above that 30,000. I think the data coming out from all of these earnings are pretty in line with what I was expecting. So I don't really see any reason for the equities to really come off, especially as we start seeing probabilities of that Fed cut continue to sustain itself going forward. All right, let's talk about the trades that I've done. McDonald's, I might end up becoming a fast food junkie, if you will, because I have on the 200 the 200 puts in McDonald's, and I decided to throw on some calls in there, and I ended up going into the November and selling the 205 calls for $1.07. So I'm trying to play a little bit of this. I'm probably going to let somebody put this stock to me at 200. It is right there at that 200-day moving average. Now I've got on a strangle around this, so trying to lower my break even there with this trade. So my break even is now right about 70 cents below where we are now, because if you remember, I sold those 200 puts for about $1.10. Now I've got the 205 calls in there that I'm short for $1, so that puts my break even at 198. I'll be happy to take it on right around that $200. I don't think the McDonald's is doing that bad. They've even talked about the overseas markets not that bad. They did miss on earnings, but forward guidance was pretty decent, and they're talking about now getting into the plant-based meat or the Beyond Meat type of products that everybody else has started implementing. I think that'll help them out on their bottom line as well. Now Chipotle came out. They overnight, I've got this as the overnight because they came out and they beat. They talked about forward guidance being really good, and that the carne asada was a big market driver, just like I talked about with implementing this, thinking that it was going to be very bullish based on that. So at $40 down on the day, I am not at all really concerned about Chipotle moving higher here. So if you haven't gotten out of this trade, I'm not too concerned about it. I think we're going to continue to see volatility come out of it. Having said that, I haven't gotten out of this trade yet. I went in and sold the November, sold the 730 puts in there for $5.40, right there at around $5.40 on that, or it's $5.60 is the last trade that I've seen there on Chipotle. So I'm at a scratch for it. I'm going to leave it on. I think that I can get out much better. I think that people are going to come in there and start buying this product right now. So I'll keep you guys posted on that. So at this point, nothing done there on Chipotle. I'm not going to sell any calls on it because I expect this market to continue to move higher. Otherwise, we got the volatility really coming out of this. It's a brilliant day when you can be down $40 in a stock that you were bullish on and you are at a scratch at this point. So I'm very happy with it. Or not very happy, I shouldn't say that, but I am happy with the trade location. These are the things that we talk about with these webinars, is how to implement these strategies so that you are increasing your probabilities of success. And this is another great example of being completely wrong on directional moves, but because we implemented those according to the rules that I talk about in these webinars, high implied volatility, taking advantage of that, you can see where something that would normally have been a disaster, I'm at a scratch. So, in my eyes, that is a win because of all of the ways that we set these things up appropriately. All right, that's all I got for you guys. I will keep you guys posted on CMG and McDonald's, but other than that, I haven't added anything. We do have a couple more earnings coming out, and follow me on Twitter at Woflman's blog, because I'll be throwing those out there if I add anything. And that's about it. If you can't take that, take it easy.